Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to tell you what you need to know before you go, and that starts out with the economic data, and then we'll talk about some geopolitical fodder to throw it in there to round off the analysis. But let's talk about that economic data really quick. Oh, wait, don't forget to smash that like button for me. Before you go, let's talk about the economic data and all this stuff that we've been seeing lately. We've been talking about inflationary pressures. That's been what's sending interest rates higher, the bonds lower, right? They're inversely related. As the bonds go lower, that means interest rates are rising. Have they gotten ahead of themselves a little bit? I think they might have. And here's why. Because one of the aspects of this CPI number, which is the consumer price index, that's the number we really want to look at because it tells us if the producer, who we obviously know is paying higher prices for the raw goods that goes into the manufacturing, are they passing that off to the consumer? Well, it looks like they are a little bit. Yeah, it went up a little bit, but it isn't making up, or it rose actually more than what we're seeing rise in wage inflation. Now, everybody was touting wage inflation. As a matter of fact, I mean, Biden even said, I want you to hold on to your wages and not have the inflation elsewhere. Guess what? Those are one and the same, folks. If we have higher prices or we're paid more and wage inflation, that means that there's going to be inflation because we are all buying more with dollars. So it does run hand in hand there. Another thing, though, that we saw with this wage inflation is we saw it rise like 0.6%. Well, we're seeing the consumer price index, even the core consumer price index, outpace that. So while it feels like you're getting paid more, we're paying more outside for other products. Food went up 1%, which is actually a pretty big jump, especially when you take it into account for the last full year. We're up 8%. Now, we all saw that wage inflation was up 6%. All right. So that shows you that, yeah, you're getting paid more, but you're still losing 2% due to the inflation of materials and or food and energy. So 8% up in food, we only got paid up 6%. We're losing money there. So that is one of the big products that everybody's talking about here. Yeah, it seems like there's a lot of good things going on. Some folks are really wanting inflation. Well, if we're going to have inflation, we need everything else to follow through with it, because if wages can't keep up with inflation, then we're actually losing money to inflation there and could cause a recession there. So with that said, let's get on with crude oil. We got crude oil inventories coming out tomorrow. One aspect of crude oil is the fact that if the economy starts shuddering, then we're going to start seeing crude oil start to lose a little momentum here. I don't know if that's necessarily what we're going to see right now. I think it's going to keep continuing to try to test 100 until we get a little bit better view on what's going on with the overall economy. Now, we've been talking about bonds lately, right? As interest rates, they're talking about rising. Well, we'll see these bond prices go down. That's just what we're seeing right now. Bond prices going down. We've seen that the Fed is going to stop their asset purchases, which means supporting this market. So that's why we've seen a lot of sell-off here. Now, I do think we've gotten a little overdone. Are we going to be raising interest rates at this clip with the economy kind of in flux? I don't think so. I think we're going to see a more moderate pace. Some folks are saying this might push them back to that 50. I don't think so. I think they're going to get to about 1.25%, maybe 1.5% by the end of the year, and they're going to let that meld a little bit and see how it works out. Other economies we're seeing, like in the zoo economic sentiment, which is a German economic sentiment there, that number came in at -43. It was supposed to be -46, so that's better. But keep in mind, this number is the high water mark, or the above water mark is 0. So we are very negative. It needs to go positive to be a positive outlook there. We got the National Federation of Independent Home Builders here in the United States as well. That came in lower than expected. Now, when a couple of years ago we were seeing that in the hundreds, it's precipitously pulled back here to 93.2. Last month it was 95.7, was expected to be 95. So in line, maybe a little bit less, but we saw a pretty decent drop there on that number. We're also going to get our tip economic optimism here in the United States, which is very similar to the zoo economic optimism. That's coming out in a couple hours here. So keep your eyes out for that. Bonds, I think that they are going to see a little bit of a bounce here. How much? Probably not back into that value area, but I think we'll see at least some upside there. Now, gold, rightfully so, is making this move to the upside. Whenever we see these inflationary pressures that are superseding everything else, well, that means that the dollar is going to start weakening. All right. And that's why we see these gold prices start to move higher, is the product of the levers and pulleys in the markets. Gold is moving higher. Well, yes, for inflation, right? As inflation rises, that's why people use gold. But a lot of that is because of the levers and pulleys of what is happening with the dollar as it's weakening. We need to see that gold prices start to drive. And then over in Bitcoin is a little bit disappointing here with the market action we're seeing in gold. And as long and we've been trading Bitcoin, it's become a pretty solid product, to be quite honest, as a investable product. Well, that said, with all this turmoil going on, I would really expect to see Bitcoin start to get a little bit of upside move here, but it's just not following through with anything for a fear, or it doesn't feel like it's a flight to safety really still. VIX, a little bit in between there, but we've got the markets making a little bit of a turnaround here. Why? I've been talking really bad about the economy lately, right? Well, yes, some of that has to do with if the economy is starting to slow and it's not looking good, well, that goes back to my thesis that the interest rates aren't going to rise as much. Equities are going to enjoy that kind of environment. So I think that equities are getting a little pressure relief right now and looking for a little bit of a bounce. I've talked about this. Yes, I think we'll see NASDAQ. I thought it would extend a little bit more to the value area low here, but we were talking about this market wanting to come back to this volume node, and that's exactly what we've done. It lines up with the Fibonacci. Some people would have said that Fibonacci. I said it lined up because of the point of control. That's a market magnet, okay, where people have transacted the most. Markets have a tendency to migrate back and be a self-fulfilling prophecy, if you will. So we've done that. We've come back to that mark. I think that we could see a little pressure relief rally here on equities as well. Now, while I talked about the NASDAQ being a little overextended, we also talked about value in the Dow Jones products. And when we saw this sector rotation happening out of the NASDAQ, we were going to see that really fall out of bed, people falling into the Dow Jones products. And if we saw more of turmoil going on or some angst in the markets, we would probably see the Dow Jones hold on to value a little bit better than we would with some of these tech stocks. Tech obviously is some of the weakest hands out there. They will fold quickly. And then when we started seeing that rotation out of the NASDAQ and into the Emini SPs, I talked about this. We're seeing the sector rotation. People are still seeking some risk here going into the Emini SPs. If we see the equities really start to roll over there, we were going to see the Emini SPs probably have those weak hands dump early. That hasn't happened just yet. We're right at the point of control, so a lot of folks are happy with this position. But keep in mind, think about your trading. If you just put on a trade and it's not working out, how likely are you to stay with that trade? Same idea goes with the many S&Ps. Say, for instance, you rolled out of some tech from the NASDAQ, tried to find some value over here in the E-mini S&Ps, and that starts rolling over. What are you going to do? Immediately roll. You haven't been invested in that product long enough to really fall in love with it, so you'll have a tendency to dump out of that. That's my worry with the E-mini S&Ps. Dow Jones, I think we'll see a little bit of retaining of value and maybe not as much volatility there. Now, here is the market off of the expectations that we might not see those higher interest rates as quickly as some folks were calling for. I don't think that they are going to be nearly as hawkish with the economic data that we've been getting out lately. Yes, they have to worry about inflation, but they also have to worry about the recession, the yield curve inversion. That's a signal that we could start slowing down. So there's a lot of things the Fed have on their plate today. Idea here, folks, is if you've been sticking along with this covered call, selling the puts mentality, right now would be the idea to start, hey, we've had a bit of a pullback. We're seeing some relief here. Maybe for the next couple of days, it'd be an idea to start selling some puts in some stock that you would actually like to put in a portfolio. That would be my suggestion. And then when we start getting these rips, look for those covered calls, get in and out of those, play those right now while we're trying to determine what direction we're going to start to go to. And in the meantime, we just have to stay diligent, stay mechanical with our portfolio, and try to lower overall cost basis. This is an opportune time to do something like that. All right. So make sure you check out my videos that I do on Thursday, because I talk about the real details on every single strategy, when, where, and why you would want to put them on and why you wouldn't, how you can turn the tables of probabilities in your favor. And if that's something that sounds interesting to you, there's a subscribe button with a bell. The bell will tell you when I come in unannounced. More times than not, I just pop in here and start talking. So make sure you guys are subscribing with that bell if you want to listen to what I'm talking about here. All right. And Thursdays is announced. All right. We're doing that at 7 o'clock Eastern. And that's where I drill down on a specific strategy. All right. So if you can't take that, take it easy. Don't forget to smash that like button. Take care, guys.